As investors digest Tesla's latest earnings report, Wall Street remains at odds over how you should play the stock in your portfolio. Let's bring in Tom Narayan, who is RBC analyst, who's bullish on Tesla stock with an outperform rating. We've also got Roth Capital Partners senior research analyst Craig Irwin, who has a neutral rating and an $85 price target. Craig, I want to begin with you. What did you make of the tone, the tenor that was set from Tesla during last night's call?
You know, it really wasn't a big surprise for us. We've been consistent for a long time saying that 100 new EVs on the market in 2023, EV models from competing producers, there's going to be significant pressure. So there was a correction the back end of last year when they hit a demand air pocket and when obviously the consumer got a little bit weak for them. Wall Street got a little too bullish. And, it's a growth stock, so they know they have to keep that growth rate up. 36% deliveries growth is not all that impressive when they're guiding for 50. Really it was only 18 on the top line. Net income declined by 23%. I'm looking at this and I'm saying, the 230 basis point miss on margins, is not a huge surprise. And things are going to get worse. It's a great company, great products. Love the fact that they pioneered this market. But there's a lot of other companies that are going to be successful here too. And the valuation is egregious. Just the move today, 9% more or less, is about the entire size of Ford's market cap, to put it in perspective. So egregiously overvalued, not unexpected, quite bearish for the equity. But I think the sector is going to do very well for the long run.
Tom, let's get you in here because you did lower your price target, but you're still at 212. You're still at an outperform for the stock. So clearly you don't think it is egregiously overvalued here. Do you, though, see deteriorating demand for Tesla vehicles?
I think that's ultimately what everybody wants to know, right? It's easy to get kind of caught up in a specific earnings quarter and kind of lose sight of the bigger picture. And I think what happens here is there underlying demand problems at Tesla? I don't think this is enough evidence to suggest that. And the reason is, look at the overall auto industry. This is the biggest fear right now happening, is that pricing has to come down. From 2016 to 2019, pricing was up 9%. From 2019 to 2022 was up 37%, right? So I think Tesla is just being the first one out the gates to cut pricing. Remember, pricing went up a lot in 2022. Others are going to follow. The other thing is they're targeting the ICE market, not just EVs. They made that very clear on the earnings call yesterday. And it's a volume story and a growth story, as you pointed out, right? Name any other automaker going from 1.2 million to 1.8 million units this year. Huge growth. You have new products, Cybertruck, the potential for the Model 2. Ultimately, it's not really, I don't think it's really a Tesla demand issue. It's just an auto demand issue with affordability potentially being an issue. I don't know when anybody else making EVs as profitable as they are. You pointed out Ford, what did they just announce what their EV margins are? They're very much dilutive. So Tesla has the ability to cut pricing. And I actually think that other automakers are inevitably going to have to follow suit.
Tom, I want to stay with you for a second. What pricing do you believe that the Cybertruck is going to need to come in at in order to hit some of your own targets that you have for the stock, for the company as well?
Yeah, I think it's going to come out at pretty strong pricing. There are rumors that it could actually come out being actually not that high. I think it has the ability to come out in the 50, 60,000, maybe even higher range, but it may actually come out at that 50 level, maybe even below. It's unclear. But, ultimately, this is a segment that they're completely not in. And in the U.S., it's a ginormous market opportunity for them. We've heard reports of what orders are potentially for Cybertruck. And we understand that how they're making this is completely different than how they make any other vehicle that they have. So it has a cost advantage as well. So it's unclear on cost, but I think it could come in actually below what a lot of folks think. And I don't think it needs to be all that high. Again, you pointed out early on, this is really a play for them to get the fleet as big as possible so they can sell other products, FSD, Autopilot, et cetera. So at the end of the day, the subscription revenues you collect from that come at massive margins because it's R&D that you can scale out and then you can offset price cuts really easily. So that whole autonomy point with greater volumes, I do think that's been missed on the market. And Elon said it a couple of times that it's probably the most profound thing he said on that call. And I do think that there's a very good chance that in the future, maybe not tomorrow, this will wind up being the biggest takeaway from this call, their ability to monetize on autonomy.
I want to dig more into autonomy in a bit, but first I want to linger on the Cybertruck for a moment, Craig, and get your take, because I look at that thing, which is now years late. It looks like something out of Mad Max. I don't know what is the real market for this thing when it actually hits the market, if it hits the market? Is it going to be a bust or is it going to be this huge thing?
Let's get real, right? Let's get real. The only way they're going to have a sub $50,000 Cybertruck is a two-wheel drive truck. How many trucks sold in America are two-wheel drives? It's just not going to happen. The pricing of this thing is probably going to end up being, $70,000, $80,000, $90,000 for the four-wheel drive version. I have a very hard time seeing that being a compelling product in the market. The reservations numbers they've shared with us are based on a $100 deposit, which is almost like a joke. It's not based on thousands of dollars in deposits where you've really got skin in the game. I'm skeptical. I'm not a big believer in the Cybertruck. I love their willingness to step out and do something innovative. But if that's what people want to hang their hat on, so be it. I just, I don't think you're going to sell a lot of two-wheel drive trucks in America.
Craig, I'm reluctant to call shapes innovative. It's a pentagon on wheels. Let's be real.
With unbreakable glass, right? So
depending upon what you throw.
Honestly, I'm skeptical. I'm skeptical about the Cybertruck. This mini car it was supposed to be launched in 19. The reason they didn't launch it in 19 is the margins would have been massively dilutive. That's why we saw this dog and pony show at the most recent Analyst Day where they're talking about modular manufacturing. That's not unique. All OEMs have looked at that. Many of them have adopted it for sub-components already. It's not unique to Tesla. It's not unique to Tesla. The mini car is going to be margin dilutive. That is going to be much more serious than the price issues that they're working through right now. I think we have a troublesome period for the equity for the next few years. And, realistically, EVs are inevitable. There's going to be a lot of companies that are successful. There's going to be a lot of companies in the supply chain, either on the battery side or the component side, that are going to be successful. I just don't think Tesla's the one to invest in here. I think there are other great names. And that we need to acknowledge Tesla as a pioneer that got this market started, and the impeccable execution on great products. But the equity, I think, is troubled.
Hey, Tom, I also want to just pivot back to something that is going to be amazingly important for them is the free cash flow. And they took a free cash flow hit in this most recent quarter. Is this company going to run into a free cash flow problem in order just to ramp up to the type of customer base that they want to build out to?
Yeah, I mean, this is something we're noticing across the auto industry for Q1, right? So it's likely a working capital issue. A lot of companies are reporting negative free cash flow for Q1. Again, it's very difficult to just extrapolate so much after one quarter. This is a company that is profitable in selling an EV product where the entire industry is migrating towards a ton of growth. Again, its pricing is coming down to where ICE level pricing is, and they're still profitable. So I don't really see why there's a cash burn issue. There are pure play EV players out there that have real cash issues that are generating negative cash for protracted several years. This is not one of them. Plus, they have this a pretty significant market capitalization, ability to finance growth if they need to through other means. I just think folks are getting a little too caught up maybe in one earnings print. We need to really see what happens. I know next quarter it's probably going to be challenged as well from a margin perspective, but he said it flat out on the earnings call that once we see evidence of macroeconomic slowdown, reversing, they'll raise pricing again. And we saw that last year. There were prices going up, there were prices going down. So there could be quick adjustments to pricing when needed.
Yeah, although free cash flow has been a perennial issue, to be fair, for Tesla. It's not just a one-quarter issue. It's come up through the years occasionally. I do want to circle back, though, to autonomy real quick, Tom, and dig into that just a little bit, because this, to me, falls in the category of promises from Elon Musk. Yes, full self-driving exists, but it's not full self-driving, right? So I just wonder, it's one of these things that, in theory, sure, is a huge opportunity. I just wonder where the theory meets the reality.
Yeah, I mean, I think there's a lot of these words and, that get kind of lost in the reality. Yeah, you're right. It's probably not the best marketing, right, approach to call something maybe what it's not. But at the end of the day, people are willing to pay for a product.
He should bring back his marketing team, Tom.
If you want to call it L2 plus, right, or whatever, maybe that's not full self-driving. It's still an amazing product. I don't know if you've ever tested out a Tesla with its L2 plus features. It's pretty amazing what this can do, right? And folks are willing to pay more. Now, the attach rate has come down, right, since initially it came out. But what happens now, remember, they're getting that $7,500 credit. A lot of other car makers in the U.S. are not. What happens when Uncle Sam is paying for that and this consumer gets Tesla now for a lot less? Maybe they spend that extra cash on some of these services that can't come at huge margins, totally can offset these price cutting. And by the way, this price cutting is going to happen throughout the whole industry. Tesla's just more rational and starting it first. They're better able to capitalize on the subscription revenues. And I think others probably aren't as much.